What is going on YouTube? JP here again. I am tuning back in to try to record a live video of an ABC for us. If you're following my Twitter this morning, I mentioned that I'd go through some potential ABCs and then put out my entry. So the first one came up, A down. B was their expected pivot to go bearish, which would be the 50 to the 60%. I'm sorry, 50 to the 85% retrace of A. So to do that, you'd go from a high to the low of A. So that's our push down, right? The trend is up. What's our first correction? Down would be A. So you do a high to the low once it finds buyers. And then your B zone is going to be blank checks. Wait, what am I working on? Save as new drawings up. Okay. And then drawings, create drawings up. Okay. Blank checks. Perfect. Wonderful. So today, what happened? I was not on a 6-minute, I was on a 3-minute because you don't want to trade with 6 minutes when there's only 12 minutes of data. I saw our push up. Wow, that's a nice big bullish push. And then I saw a push down. So I'm thinking, hey, I want to find an ABC for an entry to catch this upside. But I don't want to buy it when the IV is really high. So I found an A down. So I'm going to measure that. I'm going to just draw a trend line from the high to the low. And then I'm also going to draw a fib retracement from the high to the low. And this will give me two key measurements for finding B and C. So we'll go A here, and then our B zone is going to be the 50 to the 85 retrace of A. So that is this big box here. And ideally, it's the 61.8 retrace. Alright, so now that we wrote this out, what do we have happening? So we have our A down. I'm waiting for an entry. I don't know what's going to happen here. And I see it coming to B, and I'm planning my trade for C already, right? So I want to catch the C, so I'm going to take that trend line we drew. I'm just going to activate it, and I'm going to bring it over to the expected pivot zone. And that'll give me an expected C. So what happened, right? So we did enter into this pivot zone, but we broke to the upside. Now this ABC is invalidated if we break the high. So as soon as we broke 441, I'm throwing this trade out. So this whole trade setup was a bust. But within the first hour of trading, we found two ABCs to trade. The second one we traded was actually much bigger and gave us a much better entry. So I'll go through that one now. I mentioned, hey, this looks like an A for sure. The mania of the day wore off, meaning we're coming out of this fearful market. Everyone is finally seeing a gap up. We've been seeing gaps down. We're finally seeing a gap up. People are happy. They're throwing their money in the market. So what happened? Well, the bears weren't able to short us down here, so we kept going up, and then they shorted here. So at this point I tweeted, I said, hey, this is the second ABC I'm going to go through. This one should have the actual C that we're looking for and get us our entry. So this is going to play out the exact same as the first one. We're going to identify the counter trend move, meaning, hey, we're in an uptrend, and this is, boom, against the uptrend. It's correcting this bullish push. So we're going to measure that with a trend line. And then we're going to do the same thing. I'm going to clean this fib up just so we can see a little better. So I'm going to cancel the right extension on that one. I'm going to do the same thing, a fib from a high to a low here. And then, I'm sorry, that's not the right fib mark. So it would be the high to the low here. Okay, much better. Alright, so this is our fib. And then we're looking for a 50 to a 85 retrace of this fib mark. Now we barely touched it, so it was acceptable. But at the start, our anticipated C, so we see the push down, we're going to draw our anticipated B zone, which is the 61 ideally, but anything in the 50 to the 85 range is okay. So we'll draw our expected B, which would be here. And then we can get our expected C by just activating that trend line and putting it at the 61 retrace. Now, once we failed to come up to the B, you do have to compensate for that. So you're just going to activate it and bring it down to where you failed from. And what you'll see is this finds our entry zone where we took our trade here. We actually overfailed, so we added down here. Why? Because if you go back, this is why you don't delete anything. If you go back to our first trade of the day, first expected C is right here. So it's already an anticipated pivot zone. So that being said, I was very willing to enter here, and my stop was all the way down at yesterday's breakdown number, which was 436.53. So we did enter here, and we managed to catch this trade up here. It went from what did we get? 2.67 to 1.87 to 2.45 it ended up going. So that's what it's currently at, but it's a little bit higher. I ended up trimming at 2.45, and I have a couple runners left, which I'll just leave open for the FOMC meeting coming up. But yeah, so essentially you can gauge your pivot zones and your entries, and you'll be able to avoid all of this mess because your first trade zone got invalidated. Oh, you didn't get the entry you wanted, so you're not going to just jump on the ship here because this trade window becomes very small. The implied volatility is very high, and the time that it takes to get from here to here is short, and then you start losing money. So the implied volatility being high means your return on investment is going to be low. And the time being small means it's a very short window. It's a tough trade. It's not worth the risk, so we don't take that trade. We wait. We finally find a breakdown, and we're still waiting. Now I need to see a touch of the 50 minimum, and then another push down into our C zone, and that's where we'll start to enter. So if you follow my Twitter, which I will pull up now to show you the tweets thread, you will see that the entire trade was done live, and it didn't happen the first time. The first time I tried to do this trade, the first ABC we didn't get. It was invalidated, so we just tossed it and waited, and then we hit this trade here, and we caught all of this upside. A beautiful, beautiful trade on a volatile day. We make it look easy when we do things like plan ahead a couple steps and find our entry zones, and then have contingent stop losses and adding points. So I entered here, and I added here. And that gave me a 1.87 average on a position that's now trading for 2.51. I'm on the house, and we have the FOMC meeting coming up in a couple hours. Should be wonderful. Hey, let me pull up those Twitter things real quick, and then do me a favor and let me know what I need to clear up in this video so it makes more sense, just because it's I've never really discussed this with people I'm teaching. It's just been me talking to myself, so I don't know if I'm missing something that would help clear it up. Anyways, let's pull up Brave here. Okay, so let's start. Alright, so this is our first tweet of the day. Once the market opened, I said, hey, I'm going to post my PDF, which I will link in the description down there for anyone who hasn't seen it. It has my whole trading strategy, how I trade around it, and the levels I'm looking for. It also has my risk management and rules I try to live by. But this is my first little game here. So this is the first part of the trade that we actually didn't find our C. It was invalidated when B broke above the 441.65. So we just waited. But this is how it would have turned out, right, if it did go for the ABC, which it had too much strength to do at that point in time. So the next post was, I had mentioned if what comes after B, and then I tweeted, It's a 3-point drop if we don't break 441. So that's the invalidation number I'm looking for. We didn't break 441, or we did break 441. It went above it. So the drop no longer is a conviction of mine, so I just tossed the trade. So then I mentioned that I'm going to do another ABC once the mania cools off of the day. So this is how I'm conceptualizing the day and how I'm trading. I want to get that best entry I can, and I want to get it at the perfect pivot. And a lot of that has to do with the implied volatility of things. So when you're thinking of an option that's very close to expiring, you're trading a trajectory. If this stock is going up, the premiums will be trading more expensive than if the stock's trading flat or down, because its probability of landing in the money is higher because it's on a bullish trend, right? If you're buying a call. Now, the longer out it is, the less the trend will matter and the more the price action will matter. But it's a lot about the energy and the price action. So we were waiting, and this was 1 hour ago. I said the mania wore off, and this is the tweet I put up. And these are the numbers that I'm looking for. So A was down, B is going to retrace the 0.5 to the 86, like we mentioned, and then C is 1 times the length from A. So let's see how it panned out. We did have a breakdown. We hit the 50, so it's acceptable for a B, and then we had a breakdown to C, but we had to adjust our C lower to compensate for the lack of the full retrace on the B. Anyways, I took a trade at 2.09, and I added to it at 1.65, and it is currently trading for 2.75. Let's go. So yeah, we can make trading as difficult or as simple as we want to. You can take many trades. You can take very few trades. I think the biggest thing is just finding your niche. Mine is pivots. So I literally track the stock the whole day, and I gauge pivots. To put this into perspective, this is what my charts look like. So I have macro pivots, micro pivots, everything's a pivot, right? And these are where I think that we're going to find the buyers and the sellers shaking hands, and that's where people get trapped, and then you see these explosive moves. And it's also because the buyers and the sellers trading theses are colliding, the expected move is getting smaller, so the implied volatility is going down, so the premiums are actually getting cheaper before it makes a big move, right? So it's actually contrary to what you think, right? You're thinking, hey, I kind of want to enter something that's moving. No. You want to enter when it's going against you, catch that knife at the pivot, and then have it go into your favor. You'll get the best return on investment. But just always wait for confirmations on your entries, right? Just because it hit the C, I didn't enter. I waited for a curl, and I still entered a little bit early. And then once it curled, or once it failed the curl, I waited for my next entry zone, which was our first initial C, which we did hit. And that was the trade. I hope this helps everyone. Let me know in the comments below what I can do to clear that up. But that's about a 13-minute run through of the ABCs, and in the description will be my PDF. So I hope you like it, and let me know what you think. And then, you know what they all say, like the subscribe and like stuff. Sweet. Thanks.